Good morning, everyone. This is John Mihaljevic. Welcome to Day 2 of European Investing Summit 2012. We have a great lineup of live speakers today, as well as some sessions that have been recorded in the days leading up to the conference. You can access those throughout the day in our online conference area. Just a couple of notes. This session is being recorded and will be posted online within 24 hours. And now what I'd like to do is turn it over to Oliver to introduce our instructor.
Well, thank you, John, and welcome to all of you. It's a real pleasure to have with us Florian Schuhbauer of Triton Partners, which is a leading European investment firm with more than 4 billion euros of committed capital. What's interesting about Triton is that it invests across the capital structure in private and publicly listed companies. Florian, who is a partner at Triton with significant investment and operational experience, works mainly on the public side. Florian will share with us the investment case for a German listed company with about 200 million euro market cap, where Triton is the second largest shareholder. So we're really fortunate to have Florian's perspective here as the stock is hitting record lows. Florian, please go ahead.
Yeah, hello, my name is Florian Schuhbauer. It's an honor to speak at the European Investing Summit today. And obviously a great pleasure to do a wake-up call to our participants from the US and maybe to everybody in Europe who just enjoyed a nice siesta. Yeah? So Oliver just went through my first 2 slides. That's very helpful, thank you. But I just wanted to give you, before I jump into the investment into Kontron, just a very brief description about Triton. More to understand how we invest than to tell you much about our firm, and you have 2 slides in there that you can look at and get a nice overview. Then afterwards I go through the company description, market, and our investment case. And so on page 2, as I said, just a small description how we invest, how we build better businesses, because that's what we at the end of the day try to achieve. And when it comes to public companies, we usually buy significant minorities and then use our private equity toolbox to ignite change. And we always focus on out of favor, undermanaged, undervalued, and underperforming businesses, yeah, but where we see a good core, a good healthy core that can grow once we've changed the company operationally and also corporate governance-wise or strategic-wise. And that's also how we look at Kontron. Obviously, if you look at the operational performance, and that sort of brings me to the first page of the company section, page 5, please. If you look at the performance of Kontron, share price-wise, that looks terrible. Also, profit performance doesn't look good. We're still below the old highs, clearly below the old highs. But I mean, the outlook for 2012 also doesn't look bright. So we will not even achieve 2006 numbers on if you look at EBIT. There are very specific reasons for that, and I come to that in a second. But again, we feel that Kontron does have a very good core. The market position is very good, and there are a lot of internal issues and reasons why the company isn't performing as it could do. Yeah. So what is Kontron? Kontron manufactures embedded computers, which is basically industrial PCs used in industrial application and products, but also in other sectors like in military, in medical, in transportation, telecoms. And you can think of these products as sort of the electronic brain of machines. So these are the little boxes that make sure that the machine is doing what it's supposed to do. So it does have a high strategic value for the customers. It's a global company headquartered near Munich, just outside of Munich, between Munich and the airport there. revenue nicely split, I'd say, roughly 40% in Europe, 35% in the US, and the rest in Asia mainly. So a good mix, and revenue-wise, as you can also see, good growth case. Yeah? The company actually grew organically more than 10% every year on average. Yeah? As Oliver said, current share price is at sort of a record low. After the internet bubble burst, the share price was even lower, but since then it hasn't seen levels like this. So it's currently trading just below 350. If you look at valuations, we're talking 0.4 times sales. On a normalized EBITA level, we're talking 5 times EV. If you look at operating free cash flow, it's 4.5 times, so relatively cheap, and a lot of improvement potentials. No big customer risk. Top 20 customers account for 45%, no customer more than 5%, so that's also very nice distribution. One big thing that happened to the company was a huge fraud case in Malaysia in 2010. That was just after Warburg Pincus, the currently largest shareholder, entered. Warburg Pincus, as you might know, is a US-based private equity firm that also does pipe investments. And what happened in Malaysia is very simple put. The management, together with suppliers and customers, built up a very good fraud scheme in the sense that it was nearly undetectable. Yeah, they never took out the money, but just took out the float from the interest, had very long payment terms, and made sort of $1 million every year. And then in 2010, the company announced that they would stop this non-core product, and the next day 34 million, so annual EBIT was gone. That was a cash impact, so the cash was really gone. And because of that, the company completely overreacted with regards to internal controls, processes, and for the next 12 to 18 months, they focused only on themselves and didn't really focus on product development, customers, markets. So they just lost sort of an edge. Yeah? Nevertheless, they are still world market number 2, just close to behind Advantech, Taiwanese company. General Electric is number 3, Amazon number 4. On page 6, and I won't go into that in detail, but it's important for what we want to do. You have board of directors, management, and you see a summary of the ownership. And what's important for us, in order to get our changes implemented, we will go on the board of directors. And as you see, there are currently only 5 board members. The company is supposed to have 6, so there's 1 free seat that we are going to take. And we will also change the management team. So next few pages explain the business a little bit more in detail. As I said before, these industrial PCs, better computer technology, they are focused on B2B. Yeah, they are not targeted on consumer markets. And in comparison to the PC industry, so the consumer PC industry, yeah, you're talking about relatively low volumes but much higher engineering content. And it's very important that these products have high lifetimes and a certain ruggedness. Yeah? And you usually need to customize these products to the need of your customer. You have a very close relationship to the customer, as there's a long development process before you actually ramp up the product that you do together with your customer. And you have a high customer lock-in. You're usually single source. Your products are relatively low share of wallet compared to the overall product. but they are obviously a very strategic component and are mission critical for these machines. Yeah. There are sort of three kinds of products, and there are much more, but to summarize them, there are three. One is modules. That could be boards, motherboards, COMs, where you basically have sort of a commodity developed either by Kontron or one of the competitors. You don't even need to produce it yourself. You can just give that to Asia to get this produced for you, to the Foxcons of this world. It's not tailored to specific application or to specific customer, but it's basically a standard that can be used over a lot of different verticals or within a vertical for a lot of different customers. Product life cycle typically 3 to 4 years, and the volume is up to 200,000 pieces, units per year. Average gross margin is relatively low at 20%, but you usually only have, well, let's say less than 10% development costs in there, so you have a nice EBIT margin nevertheless. Yeah. Here to be successful, you need to minimize development costs, have an efficient production, and get the logistics right. Yeah, supply chain management is key here. Yeah, and that's sort of a quarter of Kontron sales. Then you have systems. To easily describe this, you take a module or maybe 2 modules, put that in a box, and have some software content on it, and then you can sell that for much more money than the single components. You have a higher gross margin. It is then dedicated to customer needs. Usually a very specific application. Product life cycle is usually longer, up to 10 years. An average volume goes down to 1,000 to 2,000 per year. Here, key is your engineering capabilities, your quality, and your relationship and the trust the customer has in you. That's 37% of sales. Solutions is pretty much a system with much more software content. These are always joint developments by the customer and the electronic, the embedded computer manufacturer. They are always customized to specific applications, even longer product life cycles than systems. Less volume, higher gross margin. We are talking 40% plus. Yeah. Some have gross margin as high as 70–80%. Key to success here is software development capabilities, engineering capabilities, understanding what the customer needs, and again have this trust and reliable reputation that you need to get the customer's contract. This is a critical long-term relationship, and you're a single source supplier. The great thing here is your attrition rate is less than 3%. I think that the only contract that Kontron has lost were either customers went bust or they stopped the product and decided not to do a successor of that product. If you sort of go to the next product generation, you always have a big edge because you delivered in the last generation. You know the company, you have the relationship, there's the trust there, you've proven that you can do that. So you usually also get the next generation as well. If you go to the next page, you see the revenue and investment cycle. So what usually happens is there's an RFQ for a design. When you get this design win, it takes between 6 and 18 months, on average a year, to develop that product together with the customer. There are different contract types. Kontron might get the R&D investment paid upfront or paid afterwards or not paid at all. In the third case, you obviously have higher margins than during the product life cycle. What does it mean? You're a single source supplier. As I said before, very strong customer lock-in, huge entry barriers, and your revenues has a good visibility. You know that this product will sort of be in a ramp-up phase at date X. You also know the projected volume that might come or not, but if you are doing systems for GE Medical, they are pretty good at forecasting the volumes. So there is good visibility and high customer lock-in in the business model. What you see when it comes to profitability and cash flow, you obviously have the first year that's rather weak. You need to invest. Then you have the ramp-up phase where you break even, and then during the product life cycle, your profit and cash flow goes up. Then when you call end of life for the product, this reaches peak, and then it falls down together with the revenue. On next page, as I said before, we've analyzed the organic growth of Kontron. This has been a story of growing organically, but also with some good M&A activity and nice additions to the business. But organic growth of Kontron was more than 12% on average between 2003 and 2011. And the company also has a history of selling non-core business relatively quickly, and they also did this this year again when they sold a Mexican wiring harness business, which they acquired together with AP Labs in the US. What are the growth drivers behind that? If you start with the Kontron specific, they gained market share. Unfortunately, they also bought some market share in the crisis, which is now sort of haunting them as these contracts have, or some of them have lower gross margins than they should have. But that is, I'd say, now sort of dealt with and under control. And what you generally see is that the large players like an Advatec, Kontron, they gain market share and outgrow the other players. Why? Because scale also means reputation, and if you talk to customers, and we've done that a lot, I mean, they all say Kontron is the highest quality player, that they have the best engineers, the best products, not the cheapest, which we think is good, and the customer base is very loyal. If you then look to the market growth drivers, what do you see? So you see several great mega trends that will make the industry grow over the next few years. You see continuously increasing electronic content in machines. You see that legacy systems, so non-PC based architecture, like old Siemens systems, they are getting replaced by PC based architecture. Why? It's cheaper and they are much quicker to implement, and they actually are able to do more. And I come to that in a second, you see continuous outsourcing of embedded computer, and you have good growth in the targeted end markets. If you turn to 11, we try to summarize that. So you have what we assume 2% global economic growth, and then different end market driven growth, outsourcing growth, and increased electronic content growth. If you look at the peer group, and this is sort of an unfair comparison as we are comparing organic growth to complete growth, so organic and inorganic. Peer group's average growth of the top players was 15%. Kontron's is even higher there. Also, if you look 3 years back, then it's still a favorable comparison. If you look to research agencies, they all forecast double-digit or close to double-digit growth for the embedded computer industry. So on the next few pages, I'll just give you a deeper look into the growth drivers. Next page, you have outsourcing. If you look at that market, that market is actually much bigger than it appears if you just add up revenue of the main players. Why? because most of the revenue, so still 3/4 of the revenue, are captive. Yeah. Why is that the case? Because these are critical components for companies, and a lot of them still consider this core. On the other hand, technology change is getting quicker. You have more and more, or the embedded computers get smaller and smaller. Yeah? So you need more engineers. Software architecture and then hardware architecture is becoming much more complex. So at one point in time, it's really a question: do you want to invest in resources to be able to still do this by yourself, or doesn't it make sense for you to give this out to specialists? Yeah? That should be cheaper. You should be faster, time to market wise. You can lock them up with exclusivities. That is relatively common in that industry if you guarantee them high enough volumes. So it's not a disadvantage, but rather an advantage. And so you see a continuously increasing part of the outsourced market. And this is a trend that's, I mean, also talking to customers and experts, this will clearly go on. On the next page, you have the increase in electronic content and PC-based technologies. Why is that the case? Well, because it's getting more and more complex, more and more product features within machines. Yeah? You have machine-to-machine communication coming up as it's a huge topic. Yeah? So these devices need to be able to communicate with each other. So they need more electronic content and control units. You have more and more automation in machines. You need to be more efficient. You don't want to waste energy. You might have, especially in emerging markets, you clearly get higher safety requirements. So a lot of good reasons why again, this is going to happen. Yeah? And moreover, they are replacing legacy systems. Yeah? PC-based technologies are more reliable now. They're faster and cheaper to develop, easier to remotely to do remote access, and at the end of the day, they are smaller, and that means reduced power consumption. Yeah, and then we also analyzed the end market-driven additional growth. These are the end markets that Kontron is targeting. You have telecoms, where we assume 3 to 5% growth over general economic growth, mainly driven by increasing traffic and infrastructure investment in emerging markets. Industrial automation, we see only relatively small growth, but still coming on government, which is a very attractive sector when it comes to military, and unfortunately right now not so good for infrastructure investments, but that might also change. Here we see slightly shrinking markets just because of our credit crisis, mainly in Europe, but also in the US. You clearly don't want to spend money on things that you don't really need. When it comes to infotainment, that's a relatively stable market outlook. You see increase in emerging markets and a slight decrease in Western markets. On the other hand, there might be some drivers with regards to regulation that will clearly be positive for Kontron, not volume-wise, but margin-wise. Energy is a big growth sector for Kontron. Here we are talking especially about smart grid. Huge growth area. Kontron is one of the few companies that actually have good solutions for that. And then you have increased safety requirements in emerging markets for nuclear power plants. And obviously, more electricity gets generated in emerging markets as well. Transportation, again, slight growth. And then another big growth area where we clearly need to add more meat to the bone is medical. And you all know why this is growing, aging population and so on. So that, again, good attractive end markets. And what will happen in the future is that we will be much more focused on these verticals, and I come to the changes that we want to trigger in a few minutes, but the vertical organization of that company is one of the big changes. If you look to the peer group again, we always benchmark Kontron against Advantech. Advantech is leading company in this space. If you look at the margin, I mean, they make 3 times the EBIT margin that Kontron does, even though Kontron has better products. Clearly something that needs to be changed. I mean, in our internal plan, we project an EBIT margin of 9.5% in 2016, still clearly below Advantech and Curtiss-Wright. I quite frankly don't see any reason why that shouldn't be double digit, and then maybe even earlier. And I come to details on that. Now when we turn to the investment case, page 17 just summarizes sales split, share price, valuation, balance sheet. I think I don't need to go through that in detail. As we said, we think it's reasonably cheap and very attractively valued. Yeah? But we even think so more because we know what can be done, and we have a clear plan what should be done. Yeah? Also, next page again shows you that this is pretty much, if you compare that to history, as low as it gets. Yeah? Don't need to say much more. And then on page 19, we sort of try to graph out the sources of gain, yeah? and I will describe them in more detail in a second. So we have some of the gain coming from sales growth, but clearly the main drivers are margin improvement and then cash generation. And then if Kontron achieves all that what we want, you most likely also see a multiple expansion, but we tend not to use that in our base cases. Yeah? So what are the key improvement initiatives? And I'm happy to answer more detailed questions. I just didn't want to put more details on the paper. First, maybe most important point for us is improve the management team and supervisory board. The way we see this is right now a partly dysfunctional team, and they partly lack the understanding of the business. We've already initiated some changes, as you see, also together with Wabo Pinkus. As you see, the company got 2 new Vorstände, so management board members. We also expect the company to announce in due course that some of the current Vorstände will leave the company. And as I said before, we'll also going to take that open supervisory board seat. More importantly, next year the whole supervisory board is up for election. By then, that supervisory board should look materially different, which much more relevant experiences on the board. So that's one big initiative. What are the other ones? As you might have heard, the company announced a restructuring program that they will give details on October 25th, and they also report Q3 numbers. So I obviously will not give you any details on that, and can't give you any details on that. But it's very clear what we want to achieve, and I also believe that we are very much aligned with the company management. So when it comes to sales growth, very clear, we want to grow at least with industry growth. I would be very disappointed if we don't outgrow that, but mainly because we are going to sort of refocus on customers and markets. We haven't done that for the last 2 years. We were just internally focused. So we will focus on verticals, industry-specific solutions. We'll focus on higher value-added sales. We clearly need to grow in Asia. The company hired few good people in China away from Advantech. They will clearly help to accelerate growth there. And the company also started to produce the first products for China in China, which will clearly also help. And then we will also sell these products in Europe, and will have a much better margin on these products. Yeah, and then once the operational business is stabilized and the organization is stabilized, we will also do selective M&A again. This is a highly fragmented market. Top 3 player own 30% of the market. So there's a lot of room for consolidation. And the great thing here is that if you buy smaller companies, you get them very cheap. You basically buy engineers and products, and these products can then be rolled out with your global sales force. So you have high synergies on this. When it comes to gross margin, first initiative here is to streamline the product portfolio. Kontron currently has more than 2,000 products. On 20% of them, we hardly make any sales and lose money. So most of them we quite frankly don't need. There are different form factors that nobody needs, and that we can just stop. We will also improve strategic sourcing and purchasing. The interesting part here is that due to the decentral organization that Kontron so far had, all the entities use their own contracts, even though the headquarter negotiated very good frame contracts. Unfortunately, they weren't used. So there's a very easy lever here to clearly improve cost situation. Yeah, we will also reduce further the third-party manufacturing costs, and will move or continuously move up the value chain with more software content and more solutions business. Focus on industry solutions. And if you remember, I described before, modules have 20% gross margin, solutions 40% plus. It's a very margin accretive move, moving up the value chain. When it comes to SG&A costs, the company has a history of being very decentral. So they never really integrated their acquisitions, open up new offices. They had their own P&Ls and rather looked at their own good than to the good of the group. So it's very important to centralize that organization, centralize IT systems. Company just finished the SAP integration of the main entities in Europe, and so they now have one view on this company. They also merged these entities, so this is one entity now. As you can see in the numbers, they built up a lot of overhead in headquarters. Now that the integration is sort of done, they now need to reduce overhead in the entities. So if you centralize an organization, you need less decentral overhead, obviously. They haven't done that yet. There's obviously a lot of potential. Sorry, yeah, they also need to close entities. That is not really difficult, I think. And another important thing that will help to reduce costs a lot is improve processes. As I said before, they have very much overreacted to the Malaysian fraud case, in the sense that if you want to buy a pencil for 99 cents, you need at least 2 signatures, and one of these 2 needs to be a Vorstand, the management board member. Yeah? This is obviously insane. Even worse in some of the customer-facing processes. So clearly slow down the company, people don't know what they're allowed to do anymore. What you need to do is you need to empower the people, streamline processes, ease processes, make sure you still have good control of these processes and good compliance. That's very clear. But at the end of the day, this is not rocket science. And then what we also need to do is streamline the sales organization. And just to put maybe a number to this, this alone can improve EBIT by more than 10 million. And you saw the EBIT numbers of the last years. This year will be maybe half of last year, so it's a tremendous improvement. Even more potential in engineering and R&D. We currently assume that up to 30% of engineers work on projects that Kontron does not get paid for. They do upgrades on products that nobody buys, for example, or they develop form factors that nobody wants. So it's a lot of potential here to not necessarily cut costs, but use these resources in a value-generating way. And we also need to streamline the R&D setup. There are 4 R&D entities, and there's as much as 50% of redundant work in these entities. So this clearly needs to be managed much better. If you look at one of our management additions, that Chris Berg, ex-CTO of Vodafone, he will be of tremendous help to the company to get a lot of value out here in engineering and R&D. On top of that, we also want to take out underperforming engineers and also add additional software engineers as software becomes key to future success of the company. This is a potential of 20 to 30 million here in additional EBIT. So if you just add these two and not even look at additional revenue and additional gross margin, you basically can more than double this year's EBIT, which I think is a great case. On top of that, you have a lot of improvement potential in cash generation. That's something the company never focused on, and because of the organization and entities never had any control about, and they actually didn't work together but against them, as their internal targets weren't aligned. That has been changed now. Inventory has already been improved. At the end of H1 this year was 110 million. We think that should be at 80 million or less at that constant revenue. If you look at the peer group with regards to inventory days, the peer group is at 38 days, Kontron above 60. So that tells you that this is not optimized at Kontron. Accounts receivable, accounts payable are managed very well, we think. So that should be constant. And that's basically it. My last slide, and then before we summarize that, is how do we get out of that? What's the exit scenario? Very simple. For most of our companies, it's always the same. We like to invest in companies that have a few potential strategic buyers. I don't need to go through the names, but they're obviously potent competitors that could acquire Kontron. Their customers. Amazon, for example, was a customer before, is now a competitor. They entered the market with acquisitions. Honeywell, Siemens could be others that could go the same way. Well, and then you have the Flextronics, Foxcoms of this world that might want to add higher margin business to their current business. So this is, and then, I mean, there are 2 PE companies in there, so PE could also be interested in that company. So that's, we think, also a good exit scenario. And on the next page, as I said before, you're investing behind mega trends. Market is very attractive with a high growth of 8 to 10% per year. The company is in a very attractive position, even though it has some internal issues. Yeah, but that gives you a lot of operational improvement potential that we like and know how to extract and realize, and the valuation is relatively low. So with that, I hope that gave you a good impression of our investment case, and I'm opening up for questions.
Florian, thank you very much. We do have a number of questions that have already come in. I also want to remind everyone in our audience that you can type your questions in through the online interface. I'll just say right up front, I think this is really a hallmark of what we look for here at European Investing Summit, to get a large shareholder like yourself addressing our audience directly about a company that is not widely known and whose stock price has not run up but is still available dirt cheap. I think it's just a great idea to have available. So with that, I want to go to Martin Konder, who is asking what your relationship with Warburg Pincus is like. Do you both think the same way? Do you work together? And then also, in terms of the management, do you intend to change the entire team, including the CEO and the finance director?
Well, with regards to Warburg Pincus, I mean, I think we are both rational investors. There are very strict legal limits with regards to exchanging our views. Yeah, together we own more than 30%. So if we acted in concert, which we are not doing, we needed to do a mandatory bid for the company. So as I said, there are only very, very limited interaction. But we do think that we think alike. I mean, they are rational, we are rational. We both come from private equity. We have different focuses, though. They are growth investors and have a great track record in doing so. We are focused on restructuring and operational improvements, and then add some growth component to it. So we might feel more comfortable right now than they do with regards to the state of the investment. Obviously, we are in at a much lower price, and we are in. We just entered recently, and they entered 2.5 years ago. So, but yes, I mean, let me put it this way: I would be very much surprised if we started to fight. It wouldn't be rational. With regards to management team, you know, I don't really want to comment on names here. I think the management team needs to be upgraded. I also believe that these processes have been initiated. We've added 2 new ones, so obviously others will need to go. And who this will be, you'll see in the future.
Great. We also have a question from Thomas Durlach, who writes in, except for the years 2006 until 2008, Kontron's return on equity seems never to have been higher than 7%. Could it be possible that the company is in a business whose fundamental economics are detrimental to building sustainable competitive advantage? Do you believe this business has any kind of real moat?
Yeah, very good question. I think that has been much more a management issue than a market issue. I mean, if you look at Advantech, that will give you a very different picture. They are much more profitable. They have better returns on any measures, and they have less good products. So I think Kontron just didn't do a good job on managing their business. They didn't have good control over the entities. Supply chain management was terrible. Costs were built too high. And I mean, if you just look at headquarter overhead costs, they tripled between 2008 and now. It's amazing. And unfortunately, decentral overhead costs didn't go down. So that's obviously not the right way to manage that business. Yeah. So I do think that there is a good mold. I mean, you are usually single source supplier. You are in a position where you have very long customer relationships, where you hardly ever lose a customer, where you can get up the value chain within a customer, and that should give you much higher returns. And as I said, Advantech proves that this is realistic. And as I said before, I mean, we believe that there's no reason why this company shouldn't have double-digit EBIT margins, much higher cash flow generation, and then obviously much higher returns. I mean, the attrition rate of Kontron's customers less than 3%. The market is growing. The market gets more complex. Technology is changing relatively quickly, not as much as on the consumer side, but that forces the captive market to get outsourced. So we think that this is an attractive market, and the company is in an attractive position.
Florian, once all these changes and improvements are implemented that you've identified, what kind of normalized return on equity or return on capital employed do you expect Kontron to have?
Yeah, we are very much EBIT and cash flow focused, not so much focused on these ratios. But so that's I can't really answer that out of my head. But yeah, we do believe that when it comes to operating cash flow, so basically EBITDA minus capex and change in working capital, that should be a conversion ratio of clearly above 60%, to put it this way, maybe even more. And when with regards to EBIT margin, I mean, as I said, we are planning close to 10% by 2016. And I think we are very conservative there.
We have a question from Victor Matassa, who says you talk about the dysfunctional management team, but Kontron does have market-leading products. So do they actually have a strong engineering team then?
They have a very strong engineering team. I think the best in the industry. That's also the customer feedback. If now this engineering team gets great leadership, there will be a tremendous opportunity. Yes, and they also don't. I mean, there's a lot of good things if you go into sort of middle management. We think they're very good there. But you need to empower these people, get the innovational spirit back in, and lead them. And that's what the company is lacking, is leadership.
We have a question from Max Hu. Could you explain why the company is growing behind the average industry growth rate at this time? I'm worried about the fact if a technology company is falling behind competitors, it may be difficult to catch up. I looked quickly at Advantech based in Taiwan. Do you think they are much more efficient and have a much lower cost?
Well, maybe starting with the last question, Advantech does have lower cost. Just to give you one example, they are sort of same the revenue size. When it comes to R&D costs, Kontron is above 80 million for the same revenue size, and Advantech just above 50 million. So that alone is a 30 million difference that Kontron does not get paid for, which explains already a lot why Advantech is much more profitable. With regards to market growth, the whole industry, also Advantech, I mean in Q1 Advantech's revenue went down 4%. The whole industry is not growing this year. It's a difficult year, mainly because most of the big infrastructure investments are postponed. and that's hurting them. Yeah? So I mean, maybe the industry will be flat to 2 or 3% growth this year. Also, when it comes to Kontron's numbers, you need to adjust for the sale that they did. Last year they sold the Malaysian entity. That was mainly a production entity, but did have some third-party revenue. And this year that was roughly 15 million. Yeah. And this year they sold another 10 million of revenue in Mexico. So if you adjust for that, then the company will be maybe flat, maybe slightly growing, but relatively flat. It's not that the company is really organically shrinking. It's because the divestments. What is fair to say is that because of the internal focus that the company had, because of lack of leadership, Kontron lost its edge on certain products. Were basically in one vertical in industrial automation. Here, Advantech clearly introduced some very nice products, especially in the area of HMI, so human-machine interface systems, that Kontron, even though they had it on the development roadmap, didn't bring to market. And again, this is management mistake, nothing else, and being tackled right now. I don't think the company is really losing its edge. They just need better management to use the engineering capabilities. Because as I said before, they do have the best engineers in the industry.
Well, with that, Florian, thank you very much. We are out of time. We obviously wish you much success as you grow shareholder value at the company and implement the changes that you've outlined. So thank you again for your time. I just want to also announce to our attendees that our next live session will start in about 35 minutes. It'll be with UK value investor Dominic Fisher of Thistledown Investment Management. He will present his favorite ideas, so we look forward to seeing you there. Also check into our online conference area where we have constant updates as well as other sessions that are being posted there as we speak. Florian, thank you very much and see you all very soon.
It was a pleasure. Thanks a lot.